Have you ever wondered why the stock market is such a pivotal part of today's global economy? It's a question that many of us have pondered over, and yet the answer remains elusive to most. The stock market, my friends, is an enigma wrapped in a mystery, a complex web of financial transactions that represent the pulse of our global economy. At the heart of this intricate system lies the concept of a stock or share. This is a unit of ownership in a company that investors buy and sell. When you buy a stock, you're essentially betting on the future success of that company. The more successful the company becomes, the more valuable your stock, your slice of the pie, becomes. Now, the stock market isn't just a single entity. It's a collection of markets and exchanges where these transactions occur. And within this vast ecosystem, there are three main indexes that investors keep a close eye on. These are the S&P 500, the NASDAQ, and the Dow Jones. The S&P 500, or the Standard & Poor's 500, is an index that tracks the performance of 500 large companies listed on the U.S. stock exchange. It's like the pulse monitor for the U.S. economy, giving us a snapshot of its health at any given moment. Then we have the NASDAQ, which stands for the National Association of Securities Dealers Automated Quotations. This tech-heavy index includes many of the world's leading innovators and trailblazers, from Apple to Zoom. And finally, there's the Dow Jones Industrial Average. This index measures the performance of 30 influential U.S. companies from a diverse array of industries. It's like the barometer of American big business. These three indexes, the S&P 500, the NASDAQ, and the Dow Jones, are not just random collections of numbers. They are the scoreboards of the global economic game, reflecting the triumphs and failures, the hopes and fears of investors worldwide. Let's unravel the mystery of these three indexes and their significance in the stock market. Because understanding them is key to making sense of this enigma we call the stock market. What makes the S&P 500 a heavyweight in the stock market, you ask? Well, let's dive in and find out. Imagine the S&P 500 as a bustling city filled with 500 of the largest U.S. companies, each company being a building, its size proportional to its market capitalization. This city is always buzzing, always alive. It's a snapshot of the U.S. economy in real time. The S&P 500, or Standard & Poor's 500, is a stock market index that gauges the performance of 500 large companies listed on U.S. stock exchanges. It's like a scorecard that tells us how these companies are doing. But it's not just any scorecard. It's one of the most important in the world of finance. Why? Because it represents about 80% of the total value of the U.S. stock market. That's a big slice of the pie, my friends. Now, why is it so important? Well, it's not just because it represents a big chunk of the market. The S&P 500 is also a benchmark. It's what investors compare their own investments against to see if they're outperforming or underperforming the market. And it's not just about individual investors. Mutual funds, pension funds, and other institutional investors use the S&P 500 as their benchmark too. If they can't beat the S&P 500, they might as well just invest directly in it. And many do, through index funds that replicate the S&P 500. But wait, there's more. The S&P 500 isn't just a benchmark for U.S. stocks, it's a barometer for the U.S. economy, and to a certain extent, the global economy as well. When the S&P 500 is doing well, it's a sign that the largest U.S. companies are healthy, which likely means the U.S. economy is healthy too. So there you have it. The S&P 500 is not just a list of companies or a number on a screen. It's a living, breathing entity that tells us how the largest slice of the U.S. stock market is doing. It's a benchmark for investors and a barometer for the economy. The S&P 500 is more than just a number. It's a litmus test for the U.S. economy. Why is NASDAQ synonymous with high-tech stocks, you might ask? Well, sit tight, folks, because we're about to dive into the tech-savvy world of NASDAQ. NASDAQ, or the National Association of Securities Dealers Automated Quotations, is not your typical stock market. It's a unique beast, a powerhouse, a hub for the world's most innovative tech companies. Think of it as the Silicon Valley of the stock market. It's where Apple, Amazon, Google, and Facebook, among others, call home. Now, what sets NASDAQ apart? Well, It's all about its composition. Unlike other exchanges, NASDAQ is heavily weighted towards technology and internet-based companies. It's the place where high-tech and high-growth rule the roost. So, if you're tracking the performance of the tech sector, NASDAQ is your go-to indicator, but it's not just about tech giants. NASDAQ is also a playground for upcoming tech startups. So, it's not just a measure of today's tech industry, but also a glimpse into the future. It's like a crystal ball, giving investors a peek at the potential game changers of tomorrow. Now, NASDAQ's tech-heavy character makes it a volatile player. It can skyrocket when tech is booming, but it can also take a hit when the sector stumbles. Remember the dot-com bubble? Yeah, that was a tough time for NASDAQ. But it's also a testament to its resilience and its role as a barometer of the tech industry's health. And it's not just a US phenomenon. NASDAQ's influence stretches far beyond American shores. It's a global benchmark for tech stocks, impacting markets from London to Tokyo. It's a key player in shaping the direction of the global tech industry. So why is NASDAQ synonymous with high-tech stocks? Because it's where tech lives and breathes. It's where innovation meets investment. It's where the future of technology is being shaped, one stock at a time. And that's NASDAQ for you, a tech titan, a market mover, a global influencer. NASDAQ is the pulse of the global tech industry, shaping the future of our digital world. So, keep your eyes on NASDAQ, folks. It's where the action is. Why does the Dow Jones capture the headlines so often? This question brings us right into the heart of the financial world. The Dow Jones Industrial Average, known to most simply as the Dow. This esteemed stock market index, composed of 30 of the largest publicly owned companies in the United States, has a distinctive composition that sets it apart from its peers. The Dow's composition is like a snapshot of the American economy. It's a diverse mix, featuring companies from a wide array of sectors, from tech giants to manufacturers, healthcare to consumer goods. This diversity is what makes the Dow so representative of the overall U.S. economy. It's like a mirror reflecting the economic trends and patterns of the nation. But the Dow's role extends far beyond being a mere reflection. It's a barometer, a significant indicator of the health of the U.S. economy. When the Dow is up, there's a sense of optimism in the air, a feeling that things are moving in the right direction. When it's down, it signals caution, a time to perhaps tighten the belt a little. Moreover, the Dow isn't just a national phenomenon. Its influence extends to the global financial markets. When the Dow sneezes, the world catches a cold. That's because these 30 companies are not just American powerhouses, they are global titans. Their fortunes intertwined with economies around the world. So when the Dow moves, it sends ripples across the globe, impacting stock markets from Tokyo to London. The Dow Jones is more than just a number. It's a symbol, a measure, a guide. It's a testament to the power and influence of the U.S. economy. It captures the headlines so often because it's so integral to the financial world. It's not just a barometer for the U.S. economy, it's a weather vane for the global economic climate. So the next time you hear about the Dow in the news, remember, the Dow Jones doesn't just reflect economic trends, it sets the tone for global markets. What do the S&P 500, NASDAQ, and Dow Jones all have in common? They may seem like intimidating jargon, but these are the crux of the stock market, the pulse that keeps the global economy alive and thriving. Each of them, in their own unique way, shapes our financial world and influences the investment decisions of millions. Let's take a moment to recap. The S&P 500, a broad representation of the U.S. market, is a reliable barometer of the economy. It's a diverse mix of 500 of the largest publicly traded companies across all industries. The S&P 500 is like a seasoned orchestra conductor leading the symphony of the stock market with a steady hand. Then we have the NASDAQ, the tech-savvy whiz-kid of the trio. It's the home of innovation, hosting some of the biggest names in technology, from Apple to Zoom. The NASDAQ is like the electric guitar in our symphony, providing that modern, cutting-edge sound that keeps things fresh and exciting. And let's not forget the Dow Jones, the esteemed elder statesman. With its roots dating back to 1896, the Dow Jones Industrial Average is an index of 30 blue-chip companies, offering a snapshot of the American economy's health. The Dow Jones is the classic violin, its timeless melody resonating throughout the symphony, reminding us of the enduring strength of the market. Together, these three indexes form a triad of economic power, each playing their part in the financial symphony that is the global economy. They influence investment decisions, shape fiscal policies, and offer valuable insights into the health and direction of the market. So, the next time you hear about the S&P 500, NASDAQ, or Dow Jones, remember, they're not just indexes. They're the tune to which the global economy dances, the rhythm that guides investment decisions, and the melody that shapes our financial future. The S&P 500, NASDAQ, and Dow Jones are not just indexes. They are the lifelines of the global economy.